Dirty again for you. You have $3.3 million. What are you buying?
Bugatti Chiron.
There we go. Well, if
Oh.
you ask NT Money, he spent $3.3 million on CryptoPunk 4156. Beautiful ape.
It just seems so late to the party. It seems like such an aggressive price point right now during market conditions.
That's a good point. I mean, you see this purchase in December and you're like, fuck yeah, NFTs, baby. Like, I knew it was always a thing. And now you're this guy like came through the door at 2:30 in the morning as people are leaving in with like a box of pizzas and be like, hey guys, let's do this, right? Like,
Yeah.
all right. What's up, guys? It's official. We are launching episode number one after a very successful episode 0.5 of Exit Liquidity by your homies at the Alpha Mint Discord channel. I'm here with me, of course, Dirty Milk. Wrong side. Dirty Milk, what's going on, man?
What's up, fam? How we doing?
We're doing great. How's how we feeling out in SoCal there? I mean, it was spicy.
Yeah, a little spicy, The heat hasn't been too brutal, but I know it's on its way, so not getting too comfy. Just making sure, I'm ready when it hits.
Just staying cool, working on your tan at the same time.
Always laying out at least 3.5 hours a day, just the usual.
That can't be bad at all.
Not at all.
Drip, what's happening in Idaho, baby?
Yo, just burning up here, ready to get into the river. It's too hot to be outside right now.
It's that heat wave. We are almost in August, and like I said, it is episode number one of Exit Liquidity. I'm not going to forget the stinger this time, so let's hit it. No, God! Love it. Perfect. That's all you need. All right, we got a good show lined up today for everybody that's going to be tuning in. We're going to be talking a little bit about the Fed hiking the interest rate 75 bips and crypto going on a run regardless of that, which has not generally been the case. We got Facebook down bad with a 2.8 billion, with a B, on their metaverse division. Coinbase going through some troubles. Crypto going on a run. Coinbase not quite doing the same thing. Maybe they are going to be down bad too. Big Cryptopunk purchase of over $3 million. We're going to be breaking down Zeneca's letter and some of the takes that surrounded that. We have some NFT degen news. We're going to be talking a little bit about office hours. Super hyped. Not much came of it. There was a big hack that went down with C Raiders. So we're going to be touching on all of that. I don't know. What do you guys think? You want to get right into it?
Let's get into it.
All right, let's pull up the first news article here. And as I mentioned, it is Fed meets market expectations with 75 bips. Bitcoin still jumps 5%. Just to give you some context here, on July 28th, Bitcoin is sitting at just under $24,000. It is up about 5% on the 24-hour chart. ETH making a run above $1,700, up 7% and up almost 15% on the week. So ETH is having a great little run here over the past 2 weeks.
He's
doing
looking
all
good.
right. ETH is not down bad. ETH is up good. Obviously, still got a long ways to go before our all-time highs, but I don't know. I'm feeling pretty good about where crypto's at, especially with going back to the article, 75 basis points. Fed continues to increase interest rates to cool down inflation. This is in response to, I think it was a 9.3 print the last time they announced it. And this was expected, so it wasn't news that caught anybody by surprise. But typically, interest rates go up, risk assets go down. We are seeing that in the stock market. It's having good days. It's also having bad days. Crypto seems to be decoupling a little bit from that. And I think it's worth having a discussion why, because, for a long time, especially in the middle of that bull run, a lot of people would say, Bitcoin especially is a hedge against inflation. And then, of course, inflation goes up and everything just collapsed. And then you get the people coming out and saying, well, like, I guess it's not a hedge against inflation now. Crypto heads were wrong. I think it stands to reason that you always got to take a longer viewpoint of this. If you look back just 2 years ago, I mean, Bitcoin was at like $5,000-$6,000. It's been on an incredible run and it's still up great. When you guys are dealing with cryptocurrency, do you see it as a hedge against inflation? Do you buy it for that? do you hold it just for the speculative nature of it? Do you just buy it for NFTs? Like, how are you feeling about this? The price going up? Does it matter at all?
I mean, I
For
sold
me-
about
Go ahead,
3
go ahead, go
ETH
ahead.
yesterday, so I'm a little less thrilled, but it's great overall for the space. How are you feeling about it, Trip?
I don't feel good about it. I mean, like, if I bought in yesterday, I'd be feeling great. I didn't. I think it's just a short-term little run-up. I think everyone's just trading the news. I feel like a lot of people are just like, okay, it's, people are, this has happened a few times now. So I feel like it's kind of a predictable move. I say that, but like, again, not financial advice. Don't trade on this. But dude, at the end of the day, if you zoom out, especially like think macro, like the economy's not in the US anyway, I'm sure around the world, the economy's not doing great. It's not getting better. These are speculative assets. They're super risky. Like, I'm sorry, we're not going to go up before we go more down, in my personal opinion, of course. And this is in like a 6 month to a year timeline. I think eventually we will, but I also think, come winter, things are going to get a lot worse, like seasonal winter, not like a crypto winter.
Yeah, no, that's fair, and it definitely isn't. It isn't a case where we are now out of the woods, although it does feel great, especially in the moment. And this is the beautiful or terrifying thing about crypto is that, I mean, it could literally just keep going up and to the right for the next 6 months. It could drop down. ETH could go down below 1,000 and sit there for the next 2 years. It is such an unpredictable asset, really. And the only thing that I think is keeping me filled with hope, at least, is that we do have the ETH 2.0 merge, which is always good news, particularly seems to be advancing in the right direction. But the difference this time, last time, is that there are so many more buyers to pick it up at these low prices, particularly institutional money coming in. So I do think there's a little bit more of a pick me up when we start to get towards really treacherous territory, because there are people that are more than happy to have this as a long term hold, and that's the thing in crypto. Everybody's like now, right? Like
there's still a lot of people who bought in at the top and they've just held it because they don't know what else to do. And can't forget also one other huge macro event happening in the US this November is midterms. Everyone always gets more bearish on everything come midterms. They don't know what's going to happen, especially locally. Like, so again, it's pointing, everything in my opinion is pointing towards we're going to go down and we're going to get more bearish. However, markets are always irrational, especially in crypto. So
it is a wild ride. On that note, we will move into Facebook. We're going to be talking about Meta, of course, posting a $2.8 billion loss from their Meta's Metaverse division. That is a mouthful. Meta reported revenue of $452 million for the division, down from almost $700 million in the first quarter. A couple takeaways from this. One, $2.8 billion is a big number. But I do think that they were always planning on like really pumping as much money into this as possible. I don't think that this comes as a surprise, as shocking as it is on paper. The other thing, I'm pretty impressed that they had almost $500 million in revenue. Like, when you're thinking about the Metaverse division, like that includes Oculus, I suppose, some of their gaming and like, all of the immersion kind of stuff that they have, but that's not bad. Like, I saw that and I was, I would have expected the revenue to be a lot lower than that, but maybe I'm just wrong. I don't know. Do you guys think that Facebook is not long for the Metaverse play? Do you think that they're wrong for going all in? And of course, do you want them to be?
I think they're early. I think they're bound to take a lot of losses. I don't think they really know how to monetize it all yet. I still think people are their stigma's still there. They're still apprehensive. Like, it's coming. I mean, like they have a ton of money to lose too. I mean, like they'll be going pretty long on this one, in my opinion.
Yeah, for sure. Dirty, how you feeling about Meta?
I'm kind of with you, where I felt like this was a little expected. It's not that weird because they're probably just going to be throwing a ton of money into this for the next couple of years. I do agree with Drip in the sense that it is early. Someone had to do it. I think everybody realizes that, but everybody's also like a little apprehensive because it was Facebook, and nobody's gotten like a super fair shake from Facebook. But and then as far as their earnings go, I mean, if you consider Oculus, that does make sense. I'd even argue that's like low.
Could be, yeah.
If
I
you
mean,
throw in Oculus, I don't know what like how much money Oculus does. I just know like single AAA games bring in more annually than that. So
yeah, for sure. I mean, VR still has a long ways to go. Like, I really want one, but I don't feel enticed to buy one right now. Truth be told, I've never really even properly used one, but it's one of those things that I'm happy to sit on the sidelines for a little bit for. But you're right. I mean, these things, cost $400, $500, $600, $1,000 a pop, and when you multiply that out, that's not a huge amount of sales in terms of that for a quarter. But yeah, I mean, love Facebook or hate it, love Mark Zuckerberg or hate him. I think it always signaled really bullish for us in this environment, this Web3 space, doing it full time. All three of us do. That somebody like Mark Zuckerberg, again, you can say whatever you want, but the guy has been incredibly successful. He has had a vision that has paid off in spades many, many billions of times over. His company literally tanked because for the first time in 14 years, 15 years, they went down in daily active users, and it was because they pretty much just don't have anyone else left to onboard. I mean, it's an incredible company when it comes down to this, and the fact that they are willing to point their ship in that direction and post these losses because they believe that that's where this world is going. It's regardless of how you feel about it, it's incredibly vindicating.
Absolutely. The other thing too, you bring up a good point with their active users. I mean, think of Facebook's current demographic and like the people using Facebook currently. It's older. It definitely trends older. They're not
100%.
interested in this stuff. They don't know. They don't want to know. Obviously, there's a few that are very interested, but a lot of it is leaning into older generations. So once they can kind of establish and tap into the younger ones, kind of like me and Dirty were talking about Epic Games and Fortnite and all the stuff they're doing. Like once they can tap in and kind of get on board with that, even Roblox, like they can they'll be kind of primed and set up and ready to go and to monetize,
Yeah. Dirty, you have anything that you want to add to that?
No, I mean, I agree. I honestly, I'd love to see Epic Games just get more involved in the metaverse. It's just Fortnite alone. Like it's like its own mini metaverse. You've got John Cena playing against Batman, playing against Spider-Man. Like it's just, yeah. Like as far as you go with skins and stuff. So it's just,
it's skin. Okay. Yeah.
Yeah.
Yeah, actually, one of the cool things that I've recently heard about Fortnite is that the creative mode, where people can build their own games and arenas and stuff like that, actually accounts for over 50% of all time played on Fortnite now, which is
really.
Yeah, it was a pretty shocking stat of like how popular that's become. Of course, Roblox is a lot in those in that vein, right? Where it's interoperable with all these different worlds that people can participate with their same account. It uses the same underpinning currency, which is Robux. Your friends list transfers over, and I gotta say, like watching my son interact in these places, like I get bullish on anything metaverse because, I mean, if we think it's coming, I can tell you they're living in it already, right? Like this is just a reality for them. They jump on and they use these things. Like he told me he went to a Travis Scott concert, and I'm like, what are you talking about? He's like, yeah, in Facebook. And I was like, oh, or not at Facebook, sorry, on Fortnite. And I was like, oh, okay. And I was like, well, how was he? He was like, it was sick. And I'm like,
dude, I'm not gonna lie, that was one of the coolest things I've ever seen. Like I watched it live, the Travis Scott thing, and I was blown away. Like I went into it thinking it was gonna be him like standing on a stage like inside the video game, but it was this whole spectacle that you could interact with, and it was just like eye-opening to where everything's going. Like the fact that you could watch these like productions inside of a video game and it translate well and it be interactive is nuts.
Yeah, that you shared that with me. That blew my mind. I was like, I had no idea. One, I had no idea it happened. Two, like the extent of how it happened. I was like, whoa, okay, I get it now. I get why everyone's like leaning hardcore into the whole metaverse play.
It was insane.
Well, now then consider what Facebook will probably be doing, obviously with Oculus, and the fact that they have all of these people already onboarded, and then you combine it with like an experience like that in Fortnite. It's like that experience with a headset on, and they're working on increasing the fidelity, the resolution, the depth perception, even some tactile feedback and whatnot, right? Going to a concert with all of that on and stuff like that, people are going to start genuinely feeling like these are real experiences. Combine that with the fact that you are going to have your friends standing beside you. I mean, these are going to be shared experiences, and despite the fact that you might be many miles apart, it's not going to be perceived that way. So Facebook, totally understand why they're willing to post these losses. Who knows? I mean, maybe they just don't get it. And the metaverse and Web3 is just, it's for the individuals, and these smaller upstarts are gonna be the ones that make it happen. Like, I guess I'm gonna call the other side and Yuga, that they're obviously in competition for all of that. But it's kind of hard to bet against their track record, whether you care for them or not, right? So adding on to the Facebook thing, on top of it, FTC, Federal Trade Commission, does not like Facebook. They are blocking the purchase of VR fitness app maker. What was the name of that?
Was it like Within or something like that?
Within, yeah, there it is. Not in the headline. Interesting.
I mean, there you go. I mean, the government is already trying to stop Facebook from literally buying everyone in the metaverse. So, I mean, Facebook.
What are they defining the metaverse as? Is, I guess
that's actually a great point.
Like what? Like who? There's not one metaverse. It's like Microsoft just. Who did Microsoft buy? What were the big companies? Was it? I forgot, but they bought like
Blizzard Activision.
Yeah, the Blizzard Activision, and that was a metaverse play.
Yep.
So I just don't understand like what they're defining.
Yeah,
it's
not weird
just
when
one
they
metaverse that you can
like,
own the entire thing of. You have to create it. You don't own
a finite amount of land. Yeah, I think it's obviously an anti-monopolistic thing of like, the more of these companies that they consume under the umbrella, the less of a chance that there are multiple competitors in the space, right? But I agree with you. Like I find the fitness aspect of VR very intriguing. Drip and I were having a good conversation about like how fitness and Web3 are going to go really hand in hand, and how incredible of a market that is. Do you want to speak a little bit to any of that, or?
Yeah, I mean, we'll provide some links in the newsletter that will be out shortly tomorrow, to a few more acquisitions. And I think it's really going to come down to the tokenomics of fitness, because like we've already established gamifying fitness and making people more active and interested in fitness because you can gamify it. Now imagine if you can not only gamify it, but also tokenize it and pay people to be healthy. In this world, we definitely need it, but also like it's already coming. Like there's a few things, like what we're sharing a few things in the newsletter. You'll see. I'm not trying to give it too much away, and I want you guys to sign up for the newsletter. But
shameless plug, love it.
Shameless plug. But the tokenization of health and fitness is definitely coming, if not already here, and it's the future. It was inevitable.
Well, why don't we tell them where they can sign up for the newsletter while we're at it?
Yeah, absolutely. Just go to exitliquidity.io and you can sign up for the newsletter. We'll have a link in the description below as well. And yeah, exitliquidity.io. It's a bi-weekly newsletter. Obviously, we can only cover so much in this show. Like, we don't want to talk for hours, / you don't want to hear us talk for hours. Maybe you do. I don't know. Doubt it. But, basically, it's just a quick newsletter every Tuesday and Friday. You can expect it, because so much happens in this space, and it'll be quick links, digestible, easy to read, easy to go through, keep you up to date. It's not going to be some crazy long read, because no one wants to do that.
Yeah, you got it. Actually, the first one looked great. Dirty, did you ever participate in like Step In or anything like that? You intrigued by any of this, or?
The only thing I wish I did was buy those shoes for my dog walker and not tell her.
Yeah, I love it. Yeah,
and just pay her through that.
Like when I used to try and get my kid to play Critters, I'm like, yeah, it's great, man.
Just, yeah, exactly.
Oh man, shameless, love it. Can you put the shoes on the dogs? Could you buy 2 sets of shoes and have the dog wear it? Like lots of steps going on.
Dude, my dog would be so buff. And I would be so
like, come on, Sosa, we're going for another walk.
Let's go. You just see this like 200-pound pit bull running towards you.
Is that how much he weighs?
No, she's like 80 pounds, 90. But I'm just saying, if I were to
jacked, I got
yeah. All right. She's a big girl, but not that big.
Yeah, all right. All right, let's talk about another down bad. Coinbase going through some struggles right now. crypto going up. It's gone up a little bit, but I mean, what did we establish today? 380 was the all-time high or something for the stock price, sitting at what, just over $60 right now. They're having some issues. Was that?
I think the coin was it 360 or 340? Let's see.
It was a lot, yeah. I mean, all tech companies kind of took a huge beating. Of course, crypto going down and whatnot, but it's not really bouncing back the way that you would hope it would. And, you know, Coinbase under a lot of scrutiny right now. We actually filmed a reaction video of the CoffeeZilla and Kobe YouTube video where, you know, the SEC is coming down on some insider trading that was going on within the company. It's become very apparent that Coinbase is not able to kind of police themselves and enforce all of these policies and whatnot that they've implemented. Feels like they're turning into a little bit of a shit show. Brian Armstrong, pretty strong feeling leader and whatnot, but maybe things are spiraling a little bit out of control for Coinbase as the SEC continues to probe them. And I feel we need to mention, like, not only this stuff, but of course the NFT marketplace, which was such an exciting part of late last year. You know, hearing these projects partnering with Coinbase, they were going to be listed on the NFT marketplace. The huge signups for beta. This thing was going to be massive. It was going to be an absolute game changer, and it really just kind of came onto the scene with barely a whimper.
Nothing. Like,
how bad is Coinbase doing right now? Like, this is an ultimate bag fumble, maybe, or, you know, is this just crypto's down and the perception of Coinbase being a publicly traded company with it is just not great, adding on to the fact that they are a tech company and tech has taken a beating too.
I mean, the NFT marketplace, like the fact that I do this full time, like, and I had no idea like the exact day it went live for everybody is just bizarre to me. Like, I felt like it was like a month later once I realized that it was actually live and you could trade on it. I think that's a huge problem.
They opened it up to a couple of people. There was a little bit of excitement because there was some commenting on NFTs and people were kind of sharing that, but
so dangerous.
Terrible idea.
Yeah. It's just going to be 1,000 comments of rug.
Yeah.
I've always said in Alpha Mint when the bear started, like, keep your eye on Coinbase. If Coinbase is starting to suffer, or if you're seeing a lot of news about Coinbase, like, just keep watching, because, like, I'm not trying to FUD or anything, but, like, if there's a run on Coinbase, it's going to greatly affect the crypto space. If anything happens to Coinbase liquidity or solvency, I should say, it's going to get ugly. It's going to get ugly fast, because most of the US uses Coinbase to get on and off. Not all. I mean, there's a few others now, but I've always been a big believer in watching Coinbase very closely. And I'm not saying this is the end all be all, or this is going to be the end of it, but, like, it raises some flags for me. I'm just definitely more conscious of what's going on.
Sam Bankman-Fried is loving life right now. If there's one big winner of here, FTX. Just, I mean, you want to talk about some kind of dichotomy between Coinbase and FTX. One is doing just unreal. It seems to have a gigantic war chest of funds to deploy. You know, I'm going to air quote this, but kind of made it almost their personal mission to rescue the crypto market and prop up some of these funds that were on the brink of just, like, completely collapsing. Coinbase, on the other hand, not doing so well.
It does seem... Go ahead.
I was going to say, if Coinbase starts to really go down, I really wouldn't surprise me to see FTX start to acquire.
That's
I don't know if they can, though. Is there rules against that? Like,
I don't know. I mean, who knows? They have enough money, they can do whatever. But yeah, it seems like FTX can do no wrong right now. I even have one of my buddies here. He's in, like, traditional finance, and he was even like, "What's going on with FTX? Like, they're buying everything." And I was like, "I know." To me, it seems a little reckless, but
they just launched stock trading.
Yeah, they just opened stock trading. Like, they're. I mean, hey, everything's looking good in the public eye anyway. So who knows what's actually happening there? Who knows if they actually are overspending or not? But yeah. FTX is.
You guys baseball fans?
I am not.
No.
I watch the Lakers from time to time.
Nice. No, like it was like every umpire has like the FTX badge on them now too. It's like literally at every shot. Like that's a prime advertising real estate. Well done.
They sponsor everybody.
Yeah.
Like there's
crazy.
There's like 2 F1 teams. Like every esports team that you can think of is sponsored by FTX. Yeah, they sponsor everything.
Well, the good news for Coinbase in regards to their SEC, the SEC probe, is that Michael Burry, I love how they call him the Big Short star. Michael Burry.
That's how he's known. Yeah.
Says the SEC doesn't have the resources or IQ points to correctly investigate Coinbase, and that just speaks to a larger thing. And this kind of can even go back into the FTC blocking Facebook from buying that VR company. Is these big old school institutions, they just don't think that they really understand what they're dealing with, how to regulate it. And I do think that they're kind of just scrambling. Again, I'm going to go back to that kind of the Kobe and CoffeeZilla thing, is just that, like, you know, some sentiments, and I think we all disagreed on this, but some sentiments would say that they're literally just watching Twitter for scams and rugs and then going after them from there. Maybe time for its own regulatory body. I know that's something Brian Armstrong, the Coinbase CEO, has always been pushing for. But I mean, do you think that we're getting close to the point where like they're going to properly regulate it on it? Does it concern you, like as American citizens, that they're going to get it wrong, or is this thing just too powerful and they're going to have to be favorable towards it? I say as Americans because as Canada, like I feel like they have gotten it wrong a bunch, right? Like in terms of the government's view on cryptocurrency, I think it's been, especially lately, not great. So that's not even a criticism towards you guys. I'm actually kind of envious.
How dare you?
Can't believe it.
Yeah, I mean, regulation is inevitable. It always was. Some's going to be good, some is most likely going to be bad. So I don't know. I mean, leave it to our government officials to mess it up. I mean, it's pretty par for the country. So
yeah, fair. Well, I mean, I also did see that they just announced that they're going to be doing, like, I guess, tax-free transactions under $50 for cryptocurrency, which I got to believe is a step in the right direction. I mean, $50 isn't much in the grand scheme of things, but hey, if you can use your Bitcoin or your ETH or your Litecoin to buy lunch at a, Chipotle or something, then, fair game. At least it's not triggering a taxable event. I would be fairly bullish about that too.
Yeah. I mean, for me, that obviously, like, I love that because, like, if it it was a bipartisan bill that was supported. I don't think they voted on it yet. I think they're going to wait till after recess, so after August or something. But yeah, I mean, if I don't have to pay any taxes on fees or transactions under $50, I'm all about it. But it also kind of sets the floor for their digital currency whenever it comes out, because that's the other thing that's going to happen. They're going to have to abide by whatever rules they set up now for their own digital currency. Well, in theory, obviously the government doesn't have to do whatever they can do whatever they want. But so, I mean, if you want to use a digital currency, like you don't want to get taxed every time you try to spend a few dollars.
I agree with that. Dirty. The government regulates poorly on crypto and NFTs. It's game over. Are you moving to Puerto Rico to be an NFT degen full time, or is the jig up?
I don't know. That's a tough one.
Get the girlfriend, get the dog, hop on a plane. I'm going to trade JPEGs over in Singapore.
I'm down.
Yeah, that's it.
Me and Sos, leave the girlfriend.
No, I said bring the girl. Oh, okay.
Well, yeah, well,
I don't know. I'm trying to save as much as I can,
Save as much money?
Yeah. Just another tax harvest.
I can't wait for her to listen to this. That's great.
She would never.
All right. Next question. Dirty, again for you. You have $3.3 million. What are you buying?
Just Bugatti Chiron.
There we go. Well, if you ask Nick Tamino on NT Money on Twitter, he spent $3.3 million on Cryptopunk 4156. Beautiful ape there with a blue bandana on, and he wrote a thread as to why. I mean, hey, look, if you got the money and you want to flex it, have at it. I hope that this guy didn't have $3.5 million in the bank and that's what he decided to spend his money on. My gut is telling me that if you're going to drop that, you probably are doing all right. And this is just, it's a way to make a splash. It's a way to kind of turn some heads and whatnot. But $3.3 million for a Cryptopunk in this market. Could this money have been spent other ways? Like, would you rather have just, market bought as many Bored Apes as possible? Are you buying into proof more? What is your game plan if you have a gun to your head and you have to deploy that into NFTs?
This seems like a dumb purchase. I wouldn't. I have zero interest in buying an ape, but I feel like I would be better off buying in multiple apes. Just a 300 doodles.
You're sweeping the doodles floor with
maybe a couple clonex. This seems. It just seems so late to the party. It seems like such an aggressive price point right now during market conditions.
That's a good point. I mean, you see this purchase in December and you're like, fuck yeah, NFTs, baby. Like, I knew it was always a thing. And now this guy came through the door at 2:30 in the morning as people are leaving in with like a box of pizzas and be like, hey guys, let's do this, right?
Yeah. It just seems like, I don't know. It just seems very oddly timed. Doesn't seem like the best purchase. I don't know. I'm not super familiar with this account. Are they very active in the space?
NT Money has been around. I mean, 49,000 followers. He's probably gotten a good chunk of them from this purchase, as people like to flock to the punks and the ape holders and whatnot. I find it funny. I'm curious as to what this guy's net worth actually is, because I actually just read an article. Maybe you guys caught it, about Madonna being upset that the one Bored Ape that she want was not the one that she ended up getting, because the $1.5 million price tag for it, and it was like rank 126 or something. It was a very high ranking Bored Ape. Wow. She's worth just over $500 million and didn't want to drop the 1.5 million on the one she wanted. So, to see this guy being like $3.3 million for this Grail Cryptopunk, like, let's go. Kind of sticking it to Madonna, honestly.
Oh, okay. This guy started a fund back in 2017, starting with 26 million, backed by Peter Thiel and Cuban. Oh, okay, so yeah, this guy.
So that 26 million has turned into 10 million with the recent downturn, and now he's
no. This is what he started back 2017. He started back in 2017.
Oh yeah, you'd be right then.
Oh wait, here you go. Sure. His first fund. That's a different fund. His current fund. When was this article? I don't know. He's not hurting. Is basically the bottom line. So.
I just can't think of any other NFT. Like, is there any other NFT like right now that you would buy for $3 million? Like, I know that there's like the Beeples, like 69 million or whatever it was. Like,
yeah.
But it's like, obviously we don't hear of these sales very often. But like what? Like, other than the fact that you can make a Twitter thread saying I spent $3.3 million, is that it just doesn't? The price seems off. Maybe like, even if it was like a super rare, it just seems. What are punks right now? Like 90K?
Yeah, the last time I checked, the floor price was around 60 ETH, 70 ETH.
I mean, dude, the wallet that punk is sitting in has 15 more in it. So, and a few Clonex and a few nouns. So
I just don't think that justifies a $3 million punk purchase.
Though. No, I'm not saying that justifies it, but all I'm saying is like, it's not, I feel like it was definitely, it's leaning more towards publicity stuff. Not to mention, like, we haven't talked about yet, but like the tweet thread has some hot takes, some absolute hot takes.
Yeah, and that's actually what I was going to say, because I know you read it in depth and you had a couple takeaways from the thread. You want to break it down for us a little bit? It was a bit of fluff, right? Like,
yeah, there's definitely a lot of fluff. I mean, he basically, goes on to give his, in my opinion, not that great of reasons One of them being the community, but I feel like there are better communities, like especially now. Not to say punks are bad or anything, but I feel like you can get access to better communities with that money. Not to say they're not already in there, but the hottest take to me was the thousands. This is his words. The thousands of PFPs that came after punks, nouns, BAYC, Clonex, Doodles are all derivatives of punks, and it's like, no, but also like technically a derivative bought your original project, so it's kind of like. I don't understand his rationale there. But I mean, clearly this guy's better at managing money than me, so he's got different thoughts. I don't know. That to me stood out the most. It's just kind of like
that just seems like a shock value statement, to be honest.
It kind of does, like farming, the engagement farming.
Yeah, if there's one thing you want to get the apes riled up is tell them that they're a derivative of Cryptopunk.
I mean, even this tweet, punk holders generally aren't loud. They're just true believers. This is also a good indication of long-term growth. Like the project was bought out by Yuga. Like who's growing this? Like Yuga, I know like their main flagship's going to be BAYC always, most likely. Well, maybe now it's going to be like other side and all that metaverse stuff, but still like
Dirty, you had a thought in there and I cut you off. I apologize.
I don't think so.
No, okay, sorry. Yeah, I mean, if I had to pick one NFT for $3.3 million, I don't know what I'd probably be buying, like a one of one by like a Beeple or some kind of like high valued one of one, right?
Yeah, that just seems so. Because it's like how much more in like if you look at it as an investment, like how much more in value can that really? We can go up and like if the price of ETH goes up, I feel like it goes up in value, but like.
Yeah, I mean, he just kind of goes on to say that he has a long time horizon on this investment. Like, it's not something he's looking at flipping, and I don't think that ever should be, because you're just not going to flip a $3.3 million NFT overnight. But I guess if you want to put yourself in 5 years, 10 years time, and if we're assuming NFTs made it, right? Like they're just a thing that everybody uses. The value of them across the board for any project with reasonable value has gone up. You know, this is buying a Monet, you know, off his shelf rather than 100 years later. So I guess, like, you know, if NFTs hit that upper echelon of like value and importance to society, then CryptoPunks, I have to believe, are going to be right up there with it. The same with Bored Apes, right? Like these are going to be real important artifacts in the of this asset class. So I guess that's his bet, and I guess it doesn't seem like a terrible one when I start thinking about it like that. But if it's like you're owning a fund and your whole goal is like ROI, like, yeah, there's probably some better ways to deploy, but stands to reason that, there's wealthy people all over the place that will just, spend $200 million on a Jackson Pollock because they just want it on their wall. Right. And that's the amount of money they're playing with. So
It's true.
Seems like a lot.
Yeah. It's not my purchase, but also not my money.
Floor punk, and like I just feel like there's so much more upside to that.
I mean, he's got 15 others, so he already had punks. So
yeah, I mean, he's definitely experiencing problems I'm not. So
oh, absolutely.
And that's it, right? Like sometimes it's incredibly hard to put yourself in the shoes of somebody that can spend this amount of money, because I mean, even when I asked you what you would spend $3.3 million on, you picked a Bugatti, right? And like people all over the place were like, why would you ever spend that much on a car? And it's like, because I can.
You put me on the spot. I was trying to think of something $3 million price tag.
Well, it's a good purchase. You can.
Yeah, I mean, that will. In my opinion, a Bugatti Chiron will go up in value. So I can't.
Actually, ultra luxury, exotic, like sports cars and cars like that are one of the best appreciating assets, provided you don't like crash it into a pole, right? So
nuts.
Let's get into Zeneca's Substack article here. Zeneca put out an open letter talking about impossible expectations. It was a sequel on one of his letters, Letters of Infinite Regret. Of course, we talked about Zeneca last week in terms of the hack that he went through, and he said that he was not going to be making the victims of the hack whole. And I thought it was a pretty good take. I think we all agreed it was a pretty good take. I do want to actually add a correction in as well. When we talked about pre-mint and not knowing whether or not they were going to make their victims whole, they have said that they are going to be reimbursing people for their loss there. I think that there's a big difference between, I guess you want to call it a company, an organization, an establishment like Pre-Mint, and then Zeneca, just the person who's talking on Twitter. Maybe there's some difference in accountability we could talk about there, but let's actually just talk about this Substack. Drip, do you want to just give us a brief TLDR? It is quite long. There are a bunch of different facets to his take, but the overarching theme is.
The overarching theme is it's tough to be a founder and you're never going to win. You're always going to piss someone off. And it's not a fun position to be in, especially when you're in a market where all people want you to do, all your community, all the people who have bought in, all they want you to do is deliver more money to their pockets. Like it's worth a read. I kind of summed it up very crudely. He definitely speaks more eloquently on the subject, but I mean that was my general, like, if you really want my TLDR on it.
Yeah, for sure. Dirty, how do you feel about this statement? We have some other comment we can get into from Poof, of course, of EtherOrcs, and 6529 regarding this. But first, let's get your thoughts on it.
I mean, I have to agree with Zeneca on this one. It just there's this like weird thing that happens in the space where if you're not constantly like in like like pleasing your loudest complainers, where like, you know, the project's a rug, or like they're just gonna FUD it to the ground and stuff, and there's like these, but it's like, how much can you actually produce in like rewards before you start not being able to just to execute your roadmap as a whole, just because people are asking you to do things and give you these returns. I have to agree with them that like you just kind of need to stick to your plan and maybe have some stuff to trickle out when it's ready. But like to try to appease everybody is never going to happen ever. And if that's your goal, I just, you're going to have a very bad time. So it's just figuring out what's best for the project and sticking to that.
I feel very conflicted about a bunch of sides of this, obviously being in Star Wolves, and then, you know, also having done trading and just being in and living in NFTs for so long. I am going to mention Poof's statement here, which was, I hate this take. It's harmful, not specific to Moonboards or Proof, which is a segment that he goes into quite in depth in Zeneca's article. But the space has low standards. NFT project founders are in the position of power in this space. With that, you take on a lot of criticism, pretty typical of leadership in anything. He goes on to say, we don't need empathy for founders who have large treasuries and are running a business. And typically, they're the ones coming up on top here. The data is clear. Trading NFTs doesn't make millionaires. Founding projects does. What we actually need is empathy for real people, both in Web3 and outside. The real people who get burned out by Web3, who lose their money in Web3, who aren't able to get any traction here. We are bleeding talent, not founders, every day here because the space is a mess. So as a founder, here's my view. Take the empathy for me and go give it to the talented person who you see about to leave the space but aren't pulling in millions. I get what he's saying. Yeah. This might have been an easy take, but at the same time, there really was a point in time where projects could do a playbook of how to gain hype and traction and getting people into the Discord, getting people fake excited about it, selling out a project for a lot, and then running away with millions of dollars. Now, the counter side to it, and I've always said this from the get-go, is if you want those 10, 20, 50x returns, and that's what you are seeking, you have to understand that it comes with incredible downside. And that downside is, if it ain't doing that, it could very well go to zero. And I think that's one of the hardest lessons that people need to learn in this space, and I'm not saying that I want people to learn that. That's a very tough lesson to learn, but you can't chase outsized returns without outsized risk, right? And that's just kind of what it comes with it. Venture capitalists are people with huge sums of money, like we're talking billions of dollars to deploy. And when they're meeting with companies, they're still only cutting $100,000 checks, $200,000 checks. Sometimes they see huge potential in a home run company that needs a lot of funding, and they'll start to write 7 or 8 figure checks. But the point is, they take very, very, very small stabs at tons of stuff, and eventually a couple of them return that 1,000x and they make their money. The rest of it in their books is essentially written off as zero. Right. And I think that that's one of those things that I'm not for accredited investors, but when I look at this space, sometimes I get it, right? Because how often does a project that has red flag written all over it? We get, Free Market and I have been on the morning show tons of times, and up there being like, look, guys, there's so many red flags here. Do not touch this. And people will still mint it. People will still buy it off the secondary. And then lo and behold, what everyone knew was going to happen happens, which is that it's a rug. And then they're in the Discord being like, I want a refund. I want my money back. I'm sorry. I don't want anyone to get rugged. I don't want anyone to feel that kind of loss. But you can't free roll on this stuff either. Right?
Yeah. I agree with that. And a lot of there's another thing too. Like, this is such an unrealistic market. Like, the fact that like compare this to like the stock market, like you don't get airdrops, you don't get free tokens, you don't get that's not this is like
you don't get to knock on the CEO's door and say when.
Yeah, exactly. Yeah, there's the shareholders of most companies aren't sitting in a company wide stack or like something Slack or something and saying when airdrop, when token, when gate, you know what I mean? Like it's like, it's so weird to like kind of step back and remove yourself from this environment and realize how ridiculous some of these things are. Like don't get me wrong, like full respect to Poof and the EtherWorks team. Those guys are unreal for like how they started with like free mint and paying out of their own pockets and spending their own time without any idea if they were going to be anything successful. But I don't know. I mean, as a, being involved in this space on both sides, like, yeah, I have a lot of empathy for founders and, people who definitely got a bad role on projects. I mean, again, you should really read the article that there's a whole section where he kind of uses Proof and Moonbirds and oddities as Zeneca does as a, example, but he goes into a lot of detail of how, like, because of this market, because of how aggressive it can be with traders and flippers, not to mention like you're never going to get everyone in at the same time. There's always going to be secondary sales and people are buying in at different prices. So you definitely got to read it, but it's a lot.
I'm going to read the last oh, sorry, Dirty, you were about to say something.
I mean, Poof's post, in my opinion, it just like it just seemed like a good opportunity to be a nice guy when on a hot post, and it just didn't have a ton of substance to it. I don't think he's like wrong. I'm like not like you're wrong where you shouldn't give sympathy or empathy to people that are thinking of leaving the space, but it's just like it just kind of seemed like fluff, like where it was kind of like, this seems like a good opportunity to say something nice and make people like point me out to be a nice guy. Don't get me wrong, like I respect them a lot, heavily invested into EtherOrcs since mint. Been a big fan of everything they've done. I think that they have a great head on their shoulders. I think that they've approached the space very well, in a non-greedy manner. And I think that's important. And they've kind of always made everybody whole and managed expectations well. This just seemed like, oh, this is a hot tweet. Maybe I can make it sound like I don't know. I think like everything would have been fine if this tweet didn't exist.
I guess I'm hearing what you're saying, and now while I'm listening to it, I trying to put myself in Poof's shoes, right? This is a team that didn't raise money up front because it was a free mint. They relied on their royalties and whatnot to start funding the development, and that was a path that they chose, right? Like that was a conscious decision, and that project was hyped up enough that they could have charged something for the mint, and they opted not to. But I guess there's probably some frustration on his end, say watching a lot of, I mean, air quoting here, founders create a project, collect, 500 ETH, 1,000 ETH, 3,000 ETH. We've seen, Pixelmon, how many thousands of ETH did they make? $70 million or something. Raid Party, which is, a project that I loved or whatever, how much money they brought in. And just at the end of the day, they're going to be fine. But the people that the unrealistic expectations were bought into are the ones that get rugged. It's an interesting topic because like even just hearing it, I start to like I see all sides of it. I thought Punk 6529 had a pretty good just like centrist take on it, which was just I have a different take on this. Nobody is expecting rewards from punks, ringers, nouns, or MFers because none were promised. But when Moonbird says lock up your bird in exchange for rewards, it is logical that people will expect rewards. Whether the rewards are good, bad, neutral relative to the time of lockup is a personal judgment, but I don't think a project can explicitly promise rewards and then not expect people to discuss those rewards. I mean, that might feel like stating the obvious, but again, like if you put all of these promises, you as a founder are going to have to put your money where your mouth is, and the community, and one of the beautiful things about Web3 is the access, are going to hold them accountable. The one thing I will say is that sometimes people get like real fast with it, right?
Yeah, I mean, even Zeneca says in his article, like Moonbirds or Proof or whoever probably could have managed those expectations better, but at the same time, with those floor prices, you're never going to. The higher the floor price, the more ridiculous the more return people are going to expect on the airdrops or rewards or whatever they're coming out with, just because they feel like it's owed to them or something. Especially people who bought in later and didn't like get the original 2 ETH mint on Moonbirds, but. And it's zero sum on that one.
That's an incredible point too, right? Because people buy into a project on the secondary, sometimes for hundreds of times the mint price.
Absolutely.
And their expectations are set at that secondary purchase, even though that money doesn't go directly to the developers, the project founders or whatever. It goes to the person that sold them the NFT. But in that person's mind, they said, I just spent $10,000 on this NFT. When?
Yeah.
It's a great point. Like everybody's expectations are tiered differently based on when they participated in the sale. And for somebody that bought an MFer at 0.03 or however low they dropped, they ran up to almost 10 ETH or more. Then somebody buys a 10 ETH, and sure, MFers might be a bad example because they explicitly have no expectations, but the perception of that investment is two very different things when you've bought the bottom and you've bought the top, right?
I mean, yeah, even look at Bored Ape and Yuga, like, dude, they've created life-changing money time after time with multiple different drops for multiple different people.
But if you bought when the floor price was 150 ETH after the ape drop, you're probably not feeling great about it.
That's the founder's game. You're never going to please everybody. Never. You're just never going to win. You're going to make some people very happy, and you're going to make people, you'll be their mortal enemy until they die. Like that's the game you play in this space anyway.
I also think that some of these responses are like missing the point. Like the Punk response seems like it's responding to a specific paragraph in the article opposed to responding to the whole article as a whole. Because I just feel like he's speaking, and then Poof's response is like talking on the 1% of founders that are successful. Because it's like how many projects launch that fail and whose communities have a knife to their throat that are just constantly being like, when are you going to do something? When are you going to do something? But they can't rug because they don't want to be a rug, but they have no funds because they've spent it on trying to please all these people that have a knife to their throat. So it's like, that's who he's referring to, in my opinion, like as far as Zeneca goes. He used oddities and moonbirds and proof as an example, but like when you're saying like the founders are the winners in this space, like I'd argue that there's a lot more winners that are trading in this space than there are founders that are having successful profits from a percentage point of view.
That would be interesting if we could ever see like clear stats. I mean, it's a great take, man, and I honestly hadn't really considered it.
That's true. Yeah, I mean, the other thing too, like you can't forget some of the founders on the rug side of projects, like, you know, they're taking a lot less risk, you know, but there's still a ton of people who, yeah, maybe they didn't bring in millions of dollars, but yeah, like tens of thousands of dollars trading for them is life changing. You know, that's like, it's a big deal, you know. That's a good take. Yeah.
And it's like imagine like these guys spend 6 months of their time on a project, something goes wrong with the contract, and then now everybody's like, screw this project, like this project just no longer exists, we're moving on. And it's like everybody's work for the past 6 months, they don't even get paid out on that now because the mint didn't go through, and everybody's written them off because nobody who's actually ever written a smart contract is telling them that they don't know how to write a smart contract. And it's just like this weird, I don't know, I just feel like there's just so many founders just get put through so much crap in this space and have to put up with a lot that like I think maybe throwing a little bit of sympathy their way is okay.
I honestly think it just comes down to like how you engage and interact with the community and manage those expectations, set those expectations, and create like the core values around your project. Because I've seen it time and time again. We know these projects know how to create incredible amounts of hype. Some of them even with good intentions on their roadmap and good intentions of developing it for the long run. When you create that ridiculous hype and you create a sense of urgency around needing to own this, needing to mint this, needing to participate in this, needing to grind for your allow lists in the Discord, racing to fill up those spots, like everything is just fast, urgent. They've set that tone, they've set that expectation, and then I just don't think at the end of the day, if that's the route that you went, you can't feel bad for yourself when now all of a sudden everybody is holding you to those unrealistic expectations that you yourself have set, right? Yeah. And I think that it shows what some good projects are doing in that, you know, very transparent, very deliberate, not rushing. We're going to do things the way that we've laid it out. Of course, listening to community feedback, engaging with it, but not necessarily changing your whole perspective of things or your whole process to appease people, right? I think it's at the end of the day, I guess this is the lamest take of them all, but it's just about finding a balance between those people that Poof is talking about and those people that Zeneca is talking about, right? And you know, I think the accountability coming down the pipeline is going to be good for everybody. I know, lame, right? I need a hot take.
Yeah, come on.
Hey, yeah, you got to get us a clickbait take.
Yeah. All right, let's cap this off with a real quick discussion about office hours, free mint meta, some free mints that led
speaking of EtherWorks team.
Yes, true. Bassett creating office hours, which is a pretty unique type of NFT where, you know, based on time zones in the NFT, based on the profession that the NFT has, they will be earning, you know, different yields and whatnot. There's different ways to participate with it. Very exciting, very hyped out.
There was a lot of attention. Yeah, there's a lot of attention on this.
And a lot of anger after the mint.
Talking about it. Sorry, what?
And a lot of anger after the mint because, you know, the mint was slated to go down at, I think, 1 p.m. Eastern. Doesn't matter. It ended up minting out before that, got shared with some alpha groups. You know, I was actually fortunate enough to mint them. I was unfortunate enough to not sell them. And it seems like the project is pretty well dead. It'll take a lot to revitalize it at this point. It's pretty much at a below 0.01 ETH floor, and the volume has all but dried up. But it did about 400 ETH in volume very, very quickly. It was trading at, I think, 0.4 at its highest. So if you got in, got out, you did great. But man, people that didn't get to mint for free, mint for free. Yeah. We're angry. Actually, I think Dirty Milk was one of them, so I might be rubbing salt in the wound a little bit. But
I mean, I'll give my hot take when it's ready to be a hot take.
Get angry, man. Yeah. No.
Well, it's see, the thing that's I think is frustrating. Well, how do I say this? I understand the frustration from the people, and I think what they should have done was made sure there was an amount that could be allotted at 1 p.m. Because I'm an Ether Orc holder. I was in Orc Alpha. I was one of the people that got early access, and I still didn't hit the mint. And it's not like, and I was quick on it. So it's like, if somebody who got the early access couldn't mint, and then they decided to still post the link at 1 p.m. when it was sold out saying the mint is live, extremely bad taste. It's like, no wonder everybody was upset, because it's like, I had early access to it and I couldn't even mint it. So it just, of course people are going to be upset. What they should have done is say, hey, we didn't realize how many people wanted this in our alpha communities. It's sold out. And then like posted like a link to the secondary, but I'm pretty confident they posted the contract and the directions on how to mint it, because they had a really cool approach to the mint. I'll give them that with like cool, yeah. The anti-bot measures. You got to do this math problem thing, and
yeah, it wasn't like overly complicated, but it was, you know, not bottable.
I mean, I had the opposite experience. I had a great time. I was also in Orc Alpha. I got the links early. I managed to get 2 transactions through. So
yeah, and
I don't know how I was able to mint 2, because I just saw the link that Scott posted in Alpha Mint, the DGen Dojo, and I was like, oh yeah, that's going on. I clicked on it and I was like, mint. I'm like, I don't know if I'm like, oh, I got 2. And then I proceeded to buy 5 or 3 more on the top.
He might have bought one of mine, because I listed pretty high, just thinking it would run up, and next thing I know, it's sold. So I have to actually double check.
I am not degen trading the Freeman meta well at all. So I am the proud owner of 5 office hours NFTs. So
at least you didn't sell a Goblin Town at 0.07.
0.0, yeah. Well, that's all right, man. You win some, you lose some.
Master
on that.
trader over here.
Do you still have any though?
No, I minted a Goblin, and then I was like, I'm gonna YOLO this one and just like not look at it for a couple weeks. And then I sold it the next morning for 0.07, and by that night they were like 1.5. Yeah. I was like, what? I think they ran to 9 ETH.
They were a wild ride. They're still at over 3 right now.
Crazy.
And then of course I got the residual runoff of that by holding a bunch of Illuminatis since mint, and of course them coming out admitting that they were the founders of it did wonders for my holdings in that regard. I'm still holding all 3 of them, hoping that I do manage to get a free Goblin out of it, because they're giving them away every couple days to those holders. So
nice.
Yeah, I mean, it could be something, but I mean, I've held them for this long, so I might as well hold on. I have a rank 30 of the Illuminati collection, so hopefully
I'm still bitter about the Illuminati mint. I didn't hit it. They had a cool approach. I'll give them that. They had a really cool approach, but if you didn't act on the mint fast and you were whitelisted, you didn't get to mint. But the contract was loopable if you found something specific on their website that told you how to loop their contract.
Yeah.
And
that was not a cheap mint either.
No. And I was like waiting, like I'm trying to be a responsible trader. And be like, okay, let's wait till like the last 1,000, to mint. And then it's just like dunzo.
Amazing. So back to office hours, the Freeman meta, and some of the other stuff going down. Of course, Sea Raiders was a incredibly hyped project that ended up being a big old scam. They would not let anybody mint unless you had a blue chip NFT in your wallet. And then, of course, you were signing away the rights to that blue chip. And, of course, there were definitely Bored Ape holders, Mutant Ape holders that were the victim of this scam. Tough take. Always hate to see it, but what are you doing free minting from your wallet that you have an NFT worth 300,000 or multiple, or even 20,000? Or again, we talked about it. Make the free wallet, go to mint. When it doesn't let you mint because you don't have a Bored Ape in your wallet, go, maybe I'll sit this one out.
Yeah, dude.
I get I get the YOLO degen trader. You want to go to the casino, roll, pull the wheel, roll the roulette table, whatever. But what was the upside versus the downside? Like, it's crazy to me. And again, I'm sorry to anybody that fell victim to that, but like, just opt out. It's fine.
It was it was an ingenious. It was ingenious on them to require that, and yeah, that just sucks. Like,
which they're not the first person to do that, but it's usually like whitelist access where you can go claim it. It's not like it wasn't like a mint criteria. So I wonder if people just got comfortable from those previous like whitelist access to where they're like, oh, this isn't that weird, and it was so hyped. But I mean, we've seen like how if it's super hyped, that is not a factor in it not being a scam, like, at all. And I just feel like people have gotten too comfortable with it being like it's so hyped, like there's no way it's a rug, and then they rug and they're like, well, shoot, and then there's this guy who's definitely
posted just before the mint, getting this for myself and 2 of my mutuals after minting C Raiders.
I'm just happy that's still up. Like, we're 4 days.
Hey, good for him.
I know he's got a sense of humor for sure. But like that,
are we sure that wasn't posted after?
It's possible.
I can't remember what time the mint went down. No, I think it was before.
I think it was before as well. Yeah.
I don't know.
Oof.
There's a couple of different sides to this. I'm gonna shut the screen down. We'll finish off with this discussion because we're an hour and a half. Look at that, or an hour and 5 minutes. Sorry. There are some people that say the free mint meta should be the only meta. If you're putting these NFTs out into the world and you want to accumulate your funds via secondary sales because you're putting out a good product and you've built up a good community, and that should be good. The other side of it is saying that it's actually a detriment, right? Like, it's just too much degen, it's too much supply, it's too much shit. There's too many of these scams going on, and too many people get burned from it. At this point, I think it's pretty safe to say that most of the people in the NFT market are just kind of passing money around between each other, buying and selling off these secondary sales and free mints. And at the end of the day, the VIG, the 2.5% to OpenSea, the 5% to the creators and whatnot, they're the ones that are basically the winners, much like the casino takes their, cut, right?
The house wins.
Is it time to just chill out a little bit? Like, do we need a pretty hard reset in this and get back to, I'm not advocating for like the Dutch auction starting at 6.9 ETH, ultra hyped mints, at 0.25, all of that stuff. But like, do we need to just start getting back into that comfortable 0.02, 0.03 per mint territory and have
the gas wars?
Yeah, well, I mean, I think you're right though. Like, I don't. Are you kidding?
I was like, it was a half joking, but I just mean that like the market essentially just like establishes the price. Like,
the market will decide.
It's easy, in my opinion. Like, it sucks for anybody who has never been through a gas war, but it's just like the market is directly deciding price right then and there. And it's the easiest kind of way to determine hype. It just, in my opinion, like, it sucks because nobody likes spending a ton of money on gas and you're literally just burning money. But it unfortunately has some very positive outcomes to it.
I would just like, if I'm making an investment, and I'm going to call it an investment, into a company and they have some kind of goals of achieving said product product, have a little bit of funding to execute, right? Like, it would be good for you to be full-time in this. And that was, one of the things that it was 100% in hindsight. And we're going to go back to Ether for the third time, but like, look at what they've accomplished without pulling in any money from that mint process, and think of what they could have accomplished if they had pulled in, especially at the time, 200 ETH, 300 ETH, 500 ETH. How far does that? Because there was a good amount of time where that project was up, live, and going, and at least half of their founding team were still working full-time jobs, right? I'm okay with, founders getting a little bit of money. I think people have, tried some interesting things like star catchers, and that's a whole other shit show, but like with some like vesting schedules and stuff like that to kind of at least hold some accountability and whatnot. But I mean, if you're buying into the vision of something, you kind of want them to be able to execute.
Yeah.
And there's no impetus for somebody that launches a free mint to do fuck all with it. And some of them are outright just saying like, yeah, this is what it is. Take it or leave it. It's a JPEG. And that's cool too, because that's managing expectations. But again, all right, hit me.
If you're in it for like the art, then sure. Like if you want to do free mints and like have that person live off royalties, that's fine. But if you want to like build into the utility side, or if you're buying into the utility side of things, I think that there needs to be an upfront cost if there's any expectation from that team moving forward, because you don't know what secondary is going to do, but they still have promises to keep if they've made them.
And things change when people have skin in the game too, right?
Yeah, personally, I think the free mint meta is fun. I think there's a time and place for it. I don't think it should be the norm. I don't think it should be the standard. I think if we want quality products, it unfortunately might be, it might come with an upfront cost. And I know that it's just kind of like a glorified GoFundMe at that point, but like, you still have the benefit of utilizing the community, having a say in potentially what goes on with the project. You can grow with it. I don't think that the free meta should be the blanket standard at all.
Fair. Drip, how are you feeling about it?
I mean, for me, the free mint meta has always just been lottery tickets. I've never looked at it any other way. I also don't do any like DD on any free project just because I don't care. But the other side of it too is I agree. Like if you want to invest in something you believe in, you want the founders or the team or whoever to have, the funding to be able to, potentially make you more money or do what they said they're going to do, what you believe in. And then the other side of it too is wasn't it the treasure? Was it Treasure Universe? They demanded everything to be free. Like, where's that right now? Where's that sitting? Does anyone follow any of that?
Never been in on Treasure too deep, but of course we
like
have some people in
all that.
Yeah. They had a great run for sure. But I think you're right. Like I think, and again, I'm not saying like every mint should be 0.5 ETH or something like that. That guy, it gets a little crazy or whatever. But like, is it like 0.01, 0.02? The purchaser, the minter, has a little bit of skin in the game, and that changes everything, right? Because as soon as you hit that free mint, and especially with how good contracts are these days, they don't cost a lot in gas, even when you have to juice it up a little bit.
Oh man, Magic is down to like 36 cents.
From a high of what, $10 or something?
$5 or something.
$5.
Like $5.60, $6 it looks like. I mean, even looking at the activity on some of these, treasure marketplaces, you're seeing a small brain sell for like 1,600 Magic, and it's still only like $600. I mean, don't be wrong, $600 is, but
when you look at where it came from and where it got to, for sure.
Yeah. No, I don't. Yeah, I didn't follow the whole treasure ecosystem too closely because I was never that vested. But I haven't heard anything about it or from them or from anything going on in that space. I know what's his name in Alpha Mint. Akon was pretty deep in that, so maybe he'll have more insight. But
yep, maybe we'll have to bring him on sometime. Done some Twitter spaces with him. He's a solid dude.
Absolutely, one of the best.
All right, gentlemen. Anything else you want to touch on before we wrap episode 1 up?
Nah, I'm good.
I'm chilling.
Definitely be on the lookout for the newsletter. Sign up if you haven't. There's just so much going on in this space. Like we cannot cover it all in one show. So
yeah, definitely. Of course, if you've made it this far into the recording, please let us know what you think about it in the comments. Let us know if there's anything you would like us to touch on, any kind of segments you would like to see us do. It's always helpful. I'm not going to say that we're going to listen to it 100%, but it is good to know where we're feeling about it. If you like this and you're new to the Alpha Mint page, please give us a subscribe, hit the like button on the video. It's a small thing, but it really does help us out, help us grow and help us keep doing this. And of course, as Strip Cult said, watch out for that newsletter. Check out exitliquidity.io. You'll be able to sign up for it there, dropping twice a week. And we're going to be building out that website a little bit to center it around all of the stuff that we talk about in the newsletter, on the show, and just generally taking it not too seriously. What was that tagline you came up with? I got to start saying that in the show.
Oh, unseriously serious about crypto, NFTs, and Web3.
You got it. All right, gentlemen. We will do this again next week. Thank you so much for everybody's time and energy. It's always great to be up here with you two. And love you.
See ya. Later, fam.
Okay, bye.